Oh, he is having fun for sure. So from the high tech to maybe the low tech, because a lot of people see real estate as a good, solid standby investment. Others, not so sure, right, because of where things have been going.
Anyway.
So are things headed for a free fall? A lot of people are very nervous about that. And if there is going to be a depreciation in price, is it going to be huge?
Brad Lamb is a real estate broker with Brad Lamb Realty and Lamb Development Corporation. Joins us now in Toronto. Good morning, sir.
How are you?
Well, we're fabulous, but you know, we've reached one of those moments, and we seem to get to them every now and again, where there's no real consensus about where we're going. In fact, even where we are. You know, we get conflicting numbers, going up, prices coming down, sales going. Where are we? Where are we going? Can you straighten us out?
Well, specifically in Toronto, we have two markets. We have a new development market and a resale market. The resale market was affected negatively over the last 4 years by manipulations from the CMHC rule changes, which basically knocked the wind out of the marketplace by making it significantly more expensive for young first-time buyers and people wanting to buy million-dollar houses, made it harder for them to buy houses. In effect, it took 20% of the buying public out of the system, and it was done on purpose. The Ministry of Finance believed that the condominium markets in Toronto and Vancouver were overheated, so they made moves to change that. So this is not a market-driven event. This is a government-driven event.
Yeah, and we're seeing that in terms of declining sales. So we're going to bring up a board just to see what the realities have been. Sales are on the decline. You say it's because of what the government did, made it much tougher for people to get a mortgage. You have to put more money down. Also, some of the changes, I think, dissuaded investors from buying up a lot of these condo units, and we know that's been happening in Toronto. Brad, if I can ask you, what is your concern, or do you have one? Because a lot of people worry Toronto and the condo market there will be the catalyst for a larger free fall in price. When interest rates rise, investors will pull out, and that'll be the start of it.
Well, if you're concerned about a rise in prices over the next 0 to 5, or sorry, a change in volumes and pricing to the negative in the next 0 to 5 years, I don't think that's a realistic worry. I think right now we're going through a slight slowdown, and it is just really going to be a temporary blip on the way to better things and higher prices in Toronto. But here's the thing. When there is a recession, depending on the severity of the next recession, we will see real estate prices fall. And usually in recessions we see higher interest rates. So it all depends on how high the interest rates go. If we look at a 1991 type correction where interest rates went to 13%, we saw a 40% drop in condo prices in Toronto. That could happen, but it's extremely unlikely. I believe, and I think a lot of people believe, that we're in a period of long-term slow economic growth. And that indicates that we'll also probably see long-term slow real estate growth.
We were just showing the folks at home a graphic about the housing market in Canada's biggest city. In Toronto, there has been a drop in the number of sales, but prices are still going up. Is that rare?
Well, you see, prices have never fallen in Toronto except during a major, terrible recession. So no one should expect prices to fall now. It's just not going to happen. If we're in an economic recovery period, which I think pretty well everyone agrees we are, it's just never been done in the history of tracking real estate prices. We've never seen any substantial fall in real estate prices at a period of slow economic growth or even high economic growth. So I think we're safe for quite a while. I mean, it's at the pace the economy is growing in the United States and Canada and in Europe. In fact, it's falling in Europe. We have a long time before the next, I believe, the next very excited economic growth period comes, which is always a precursor to a recession.
Okay, and a lot of people would buy into what you're saying, except they look at a situation like out west, and we're going to share with our viewers some of Vancouver's sales of late. Prices there have really come down. So you see 23% in 2012. Has been the decline in home sales, 2.3% in terms of selling price in 2012. And a lot of people look at Toronto, and some people, I've heard at least one expert say, you know, Toronto condos overpriced by $100,000.
Yeah, I mean, that's a wild statement, and there's no basis in that. Listen, the one thing I should say to you is you have to take Vancouver and cut it out of the equation. It's its own unique real estate market. It's very much driven by the fact it's tiny. From a geographical standpoint, it's the biggest and easiest conduit for Asian money, which is massive. So it's affected in a boom and bust kind of environment. Toronto and the east part of Canada has never been that. We have more diverse economies in Toronto. So what happens in Vancouver is not necessarily going to happen in Toronto. Our real estate economy is nothing like the Vancouver real estate economy.
Fair to say for the rest of the country, Brad, if you're not in one of the major centers, real estate continues as it has been, or does it change dramatically as well?
No, I mean, real estate is affected by negative periods of growth. So my belief, and there's many people that think like I do, that we're actually going into a period of sustained long-term real estate increases. Now, no one's talking about 5 or 10% increases a year, but I think it's reasonable to see 2 or 3% increases in the major cities that have diversified economies. But I would say this, if we go into a recession, another recession, and a severe recession, there's no part of this country that's safe. There's no part of this country that's safe from real estate. But here's the thing. Even if you bought in 1991, at the peak of the marketplace in 1990, you still made a ton of money going through 2 recessions and 1 slowdown with the high-tech bubble. You still made a ton of money over the 23 or so years that we've moved through real estate. So the key here is, don't count your net worth a day after you buy a property. Buy a property for the long term, and you'll never get burned.
Brad Lamb of Brad Lamb Real Estate. Good to see you, sir. Thanks very much.
You're welcome.
Stay with us. Much more news still to come.